An asset is a resource that holds economic value and has the potential to generate future benefits. Assets can take many forms, including tangible assets like property, plant, and equipment, and intangible assets like patents, trademarks, and goodwill. In general, assets can be classified into two categories: current assets and long-term assets. Current assets are those that are expected to be converted into cash within 1 year or one operating cycle, whichever is longer. Examples of current assets include cash, accounts receivable, and inventory. Long-term assets, on the other hand, are those that are expected to provide economic benefits for more than 1 year, such as property, plant, and equipment. Tangible assets are those that have physical substance, meaning they can be seen, touched, and felt. Examples of tangible assets include land, buildings, vehicles, machinery, and equipment. These assets are typically valued based on their historical cost, which includes the purchase price plus any additional costs incurred to acquire or improve the asset. Tangible assets can also be depreciated over time, which means their value is reduced as they are used and eventually become obsolete. Intangible assets, on the other hand, do not have physical substance and are often difficult to value. Examples of intangible assets include patents, trademarks, copyrights, and goodwill. These assets are typically valued based on their estimated future economic benefits, which can be challenging to predict. For example, the value of a patent may depend on the potential future earnings from the product it protects, which can be affected by market demand, competition, and other factors. Another way to classify assets is by their liquidity, or how easily they can be converted into cash. Cash is the most liquid asset, as it can be used to purchase goods and services immediately. Accounts receivable and inventory are also relatively liquid, as they can be sold or converted into cash relatively quickly. Long-term assets like property and equipment, on the other hand, are less liquid, as they may take time to sell and may require additional costs to dispose of. In addition to these categories, assets can also be classified based on their risk and return characteristics. Higher risk assets, such as stocks and commodities, tend to offer higher potential returns but also come with a greater risk of loss. Lower risk assets, such as government bonds and cash, tend to offer lower potential returns but also come with lower risk. The allocation of assets in a portfolio is an important consideration for investors, as it can affect their overall risk and return profile. Assets are a fundamental concept in finance and economics, as they represent the resources that individuals, businesses, and governments use to create value and generate wealth. Understanding the different types of assets and their characteristics is essential for making informed investment decisions, managing risk, and creating sustainable economic growth.